Welcome to Finpod, your daily financial digest. I am Evan, and I'm glad you are joining me today. Before we dive into the markets, a quick shout out to our sponsor, Fintwit.ai. If you are looking for real-time trading signals and top-tier stock recommendations, head over to Fintwit.ai to get an edge on your portfolio. Let's get into the action. It has been a rough morning for the semiconductor space. Corning is seeing a sharp move lower, down about 18% in pre-market trading. While the company actually beat earnings expectations, their third-quarter guidance fell short of what Wall Street was hoping for, and that has clearly overshadowed the solid second-quarter results. NVDA is also feeling the heat, down slightly this morning. The stock is facing some noise regarding a potential $250 billion backstop deal for OpenAI, which has sparked some concerns about circular financing deals in the AI sector. Plus, there is an ongoing investigation involving a former employee in Taiwan, though the company itself is not the primary target. Advanced Micro Devices is down around 4%. Investors are feeling nervous ahead of their earnings report next week, and the broader chip sector is under pressure after reports that Chinese firms are making progress on domestic lithography machines. Speaking of that, ASML is down 5%. That same report about Chinese competition in the lithography space is weighing heavily on them, as investors worry about their competitive moat. On the flip side, Apple is holding up well, slightly in the green. The company is currently in the spotlight for reclaiming its title as the most valuable public company, and investors are looking ahead to their earnings release later this week. Looking at the broader market, U.S. futures are mixed this morning. We are seeing some clear divergence between the tech-heavy NASDAQ, which is sliding as chip stocks struggle, and other sectors that are reacting to fresh earnings prints. The big story here is the ongoing recalibration of AI-linked portfolios. Investors are clearly trying to distinguish between companies with real, scalable infrastructure demand and those that might be over-leveraged. Geopolitically, the market is keeping a close eye on the Middle East, though there are signs of de-escalation that are helping to keep oil prices in check. We are also officially in the middle of a two-day Federal Reserve meeting. Consensus expectations are for the Fed to hold rates steady, but all eyes will be on the commentary regarding inflation and the path for September. In the AI economy, the narrative is shifting from pure excitement to a focus on plumbing and infrastructure. A new report from Del Oro Group suggests that spending on AI back-end network switches could approach $1 trillion over the next 5 years. This reinforces the idea that while the hardware giants are getting hit today, the underlying demand for data center capacity remains massive. We also saw Meta and BlackRock announce a new $14 billion data center project in Texas, further proving that the capital expenditure cycle is still very much alive. For stocks in focus today, keep an eye on Unilever, which jumped over 5% after beating sales estimates, and UPS, which is seeing a positive reaction to its latest earnings update. Turning to our earnings watch, we have a busy day. Coca-Cola reports before the bell, and we will be watching their volume and pricing power. Boeing is also out this morning, and all eyes will be on their cash flow and production commentary. S&P Global reports this morning as well, while Visa and Waste Management are on the docket for after the close. That is the lay of the land for today. We have a lot to watch as the market digests the chip sector sell-off and prepares for the Fed decision tomorrow. If you enjoyed this episode, please like, share, and subscribe. Leave a comment if there is a specific stock or sector you want me to cover tomorrow. And remember, for stock recommendations, visit Fintwit.ai.